welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the stock markets yesterday again managed to create history. The Nifty came just 0.2 point difference away from 25,000 landmark. Now, the Nifty made another record high, but instead of scaling that 25,000, it was just 24,999.8 and it reversed from there on. And after giving up all the gains of the day, the index ended almost at the same level that it did on Friday as well. And this is despite strong contributions coming in from, say, Reliance Industries or an L&T. The index could not sustain at those higher levels due to the sell-off, especially in the banking counters. And the banks will again be on focus today because, again, it will be the Fin Nifty expiry. So the financial services space will be again in focus today. And then, of course, tomorrow it will be the Nifty Bank. We also saw a lot of volatility in yesterday's trade. So the India VIX will be key to watch. It surged over 5% yesterday. So we'll continue to keep an eye out on that. But the big question truly is that can the Nifty bulls turn around? The so close yet so far for Tuesday. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen, and as always, मंगलवार है तो मंगल ही होगा. हम लोग इस बात पर अटल हैं और कल जो आपने हल्की सी मुनाफा वसूली देखी, we briefly touched 25,000, just 0.2 points away from it, and if you just round it off, we were just there. So what's happened, Sakshi, lately is that it's been too fast and too quick as far as the Nifty is concerned, and therefore around round numbers such as 24,000, 23,000, 25,000 and subsequently at higher levels, you will always see call writers being present there, taking that opportunity to sell at those levels and make a decent intraday profit, and that is exactly what happened in yesterday's trade. The Nifty, as I have been pointing out, has rallied very fast in a very small period of time, and therefore you see this shorter term supports falling short in providing adequate uplift to the Nifty. So at 24,836 it just ended 1 point higher, but it recovered from the low of 24,774, and at 836 it's still primed towards 25,000. But there are a series of global events that are due. You see the cues from Wall Street are muted. There is a gift Nifty number that's 50 points lower. Asia is also into profit booking, and that's mainly because we have the central banks meeting over the next couple of days, and the most watched will be the US Federal Reserve, and therefore markets are quiet ahead of the event. It's almost a given that you might see a rate cut happening in September as far as Wall Street is concerned, but what is really necessary is to find out what the commentary is behind that, and waiting for that commentary is the entire world. So for a while you have this risk of trade in equities and mild profit booking. Nothing to be worried about. In the last 8 weeks the Nifty has risen 10 percentage points. That's roughly 2,200 points in a span of about 35 trading sessions, so keep that in mind, and that's the reason why you see a mild bout of profit booking. What is good for Indian markets is crude oil trading at 3-week lows. It's below 200 DMA, somewhere like $75 a barrel, and that's also good news because you have this Middle East flare up between Israel and Lebanon. Despite that, crude oil is weak, and that's good news for at least the Indian markets. Let's look at some other details as far as the markets are concerned. Of course, cash counters remain in the thick of trade. We talked about BEL's earnings yesterday. You have a smart move coming in from the Department of Defense. It wants to purchase vehicles for the Indian Army as also Coast Guard. A lot of electronic equipment needed there, and that's going to be provided by BEL. RVNL has emerged as the lowest bidder for about 740 crores in a project that's been announced by a northern state. All these details will be given to you by Sakshi, but keep in mind PSU stocks, keep in mind defense stocks, keep in mind railway stocks, and of course banking stocks. Remember, the Nifty PSU banking index is the lone index that is still to breach its June 4th highs, and a lot of momentum has been seen over the last 2 working days in small cap public sector banks such as IOB, Central Bank, J&K Bank, PSB Bank. So keep an eye out on that segment. What else is going to be in action? Well, earnings. There is a lone Nifty company, Tata Consumer, that is going to declare earnings. You have 9 F&O companies that will come out with numbers today. Among the major ones are IOC, Gas Authority, Navin Fluorine and Industar. Industar's board will also meet for a buyback. Remember, just 1 month ago, one of the promoters sold a major chunk and now the company wants to buy back its shares. Results are out from Colgate, HPCL and ACC. ACC in particular will be watched. A lot of pressure coming in as far as ACC is concerned. Third quarter profit is down 23% at 360 crores. Revenue has slipped 1% despite volume rising to about 10.5 million tons. Keep an eye out on ACC. This is the reason, ladies and gentlemen, why you saw that mid-cap cement company India Cements sell its business to Ultratech. The promoter of India Cements has come on record in media saying that there was a lot of pressure as far as the top line was concerned and the competition was intense. That's the reason for the sellout. Therefore, mid-cap cement counters will remain in action. Options data, very strong support coming in on the Nifty as far as 24,800, 24,700 levels are concerned. Any dip towards 24,750 should be welcomed with open arms. 25,000 as always remains a very strong resistance. Let's see which particular Nifty stocks help the index to overcome that. As far as the Bank Nifty is concerned, it's hostage to 21 EMA, it's hostage to smaller moving averages 5, 8, 9 and 10. It just refuses to move above that because of selling pressure emanating on private sector banks. So all in all, focus on cash and keep an eye out on Nifty at about 24,750. Sakshi, what are the cues that are coming in from Wall Street? What are our foreign friends doing? And how have numbers stacked up in corporate India?
Absolutely, Shail. So the US market ended mixed last night as investors awaited for the Fed rate meeting outcome on Wednesday. Investors are already expecting that the Fed will set the stage for a September rate cut tomorrow. Dow Jones, remember, slipped by about 0.1% in trade, while the S&P 500 and the Nasdaq edged just about 0.1% higher in trade as well. Of course, the remaining Magnificent Seven are also likely to report the earnings in the next few days. So that is also going to be keeping the stock markets on the US and the Wall Street on the edge. The US Federal Reserve, of course, like I said, will announce the July policy meeting decision on Wednesday, and market participants will be closely tracking the commentary for the interest rate trajectory. The US 10-year bond yield dipped below 4.2%. Among commodities, gold futures quoted at $2380 levels, while our WTI crude oil futures declined to 7-week lows at around $75 a barrel. So we'll keep an eye out on that. Following the Wall Street, we saw the Asian markets trade with negative bias in the early morning trade. The Nikkei, slipped by about 0.7% in trade from Japan. We also saw the Kospi and the Taiwan also declined by about 1% each. Hang Seng and the Shanghai also down. Hang Seng down by 0.7%. Shanghai almost half odd percent down in trade as well. And following this, the equity benchmark indices, the Sensex and the Nifty in India, are likely also to start the day on a tepid note, with the GIFT Nifty indicating a 40-point downtick in trade today as the opening indications. Now, as far as the overseas investors are concerned, they again turned net sellers on Monday after a days of buying on Friday. So foreign portfolio investors offloaded shares worth about 2,474 odd crores. The domestic institutional investors, they remain net buyers for the 5th consecutive session. They bought stocks worth about 5,665 odd crore rupees in yesterday's trade. A lot of stocks that will be in focus because of news as well as earnings. So I'll stack them all up for you. PNB Housing Finance, remember, private equity firm Carlyle Group's Quality Investment Holdings PCC is likely to divest up to 6.4% stake in the housing finance company through block deals. The offer size is pegged at 1255 odd crore rupees with a floor price at 755 rupees per share. And this is as per the news reports that we are getting. Apart from this, Tata Steel is going to be in focus. The company has acquired about 557 odd crore rupees equity shares in its Singapore-based arm for about $875 million. So we are going to be keeping an eye out on that too. Now for earnings, ACC, like Shail was pointing out, Q1 FY25 consolidated YOY numbers do share that revenue was down by about 0.9% at 5,155 crores versus 5,201 crores. EBITDA was down 11.9%. We saw the margins also come in at 13.2% versus 14.8%. Net profit came down nearly 23% at 361 odd crores. Colgate is going to be in focus. Remember, yesterday the stock nearly closed at an all-time high level, and revenue was up by about 13.1% at 1497 odd crore rupees versus 1324 crores. The net profit came in higher at 33 odd percent at 364 odd crore rupees. This is again 274 crore rupees versus figure that came in last year same quarter, and slightly ahead of the estimates as well. HPCL, again the standalone YOY numbers show that the revenue was down by 0.6% at 1.13 lakh crores, and EBITDA was down 56% at 2,108 odd crore rupees. Margins came down by about 234 basis points. The net profit came down sharply by 87.5% at 356 odd crore rupees. KEI Industries is going to be in focus. The consolidated YOY numbers show revenue was up 15.7% at 2,060 odd crores. EBITDA improved by 21.7% at 215 crores. Margins came in at 10.4% versus 9.9%. Net profit came in higher at 23.8% at 150 crore rupees for the company. Pfizer reported its numbers. Consolidated YOY numbers show revenue uptick of 6% to 563 crores, and the net profit higher by 61% at 151 odd crore rupees again. So stronger than estimates. Maharashtra Seamless Q1 numbers show on a consolidated YOY numbers, revenue slipped by nearly 6%, while the EBITDA was down nearly 49%. The margins also came in sharply lower at 10.8% versus 19.9%. The net profit slid by about 38% as well. Jindal SAW consolidated YOY numbers show revenue uptick of 12% at 4,939 odd crore rupees. EBITDA up by 38%, so that was a strong operational figure. Margins also improved sharply to 17% versus 13.8%, while the profit also came in higher by 70.5% to 416 odd crore rupees as well. Now apart from this, we also will look at RVNL. The company has emerged as the lowest bidder for orders worth about 739 odd crore rupees from the Himachal Pradesh State Electricity Board, and the order is to be executed in the next 24 months. ITD Cementation, also the company has received an order worth 1237 odd crore rupees for constructing residential colony in New Delhi, and there will be also a new IPO that will be opening, Akum's Drugs and Pharmaceuticals. The 1856 odd crore rupee IPO will be opening for bidding today. The price band is set from 646 to 679 rupees per share. Shail, those are the kind of stocks that we'll keep an eye out on.
Right, Sakshi, and of course, apart from RVNL, it's the entire rail pack that saw momentum. Look at IRCON, look at how IRCTC has started to move up. There is momentum enough in IRFC. RITES is the one that started the movement yesterday. So we'll keep this pack in mind, and of course, BEL is most likely to lead the rally today in defense counters. Yesterday you saw a 10% uptick on Massgaon, which is limit up. You had 5% circuit ups on Garden Reach, and you had Garden Reach as well as Cochin Shipyard. So again, after a 10-12 day hiatus as far as prices are concerned, defense is back on the offensive. So keep these two sets of stocks in mind. And of course, the rally in the PSU banking sector was led by PNB. It was led by Canara Bank and Bank of Baroda. The smaller set of medium-sized small caps such as PSB, you had a strong move coming into Indian Overseas Bank, Indian Bank, to name a few. These are the counters that have done pretty well in trade, and most likely you'll see these move up dramatically. I'll request the PCR to fire the long-term chart of the Nifty PSU banking index, and you will see that it is yet to recover the highs that it has seen. Another theme that is running through the market is the buyback issue, which is that by 1st of October 2024, when a new rule announced in the budget that was just presented on July 23rd, money made from selling shares in buyback will now be taxed again, is something that is looking forward into the market. And you have companies potential buyback floaters such as IT stocks, IT, Infosys, and TCS, as also a pharma company called FDC in thick trade. I believe Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities, is with us. Namaste Dharmesh ji, a very warm welcome to you. And what a wonderful time to be on Dalal Street, 25,000 on the Nifty, thereabouts, and all the stocks that we've tracked in the PSU basket in terms of high beta, low ticket size are back in action. How do you explain this fantastic rally that's happening on Dalal Street?
Namaste, Sanji. Good morning to all. See, it's just that liquidity, and that too from the retail segment, which has been driving it. And it will continue to do so because the kind of SIPs which are flowing in. I was just tracking the SIP flow, apart from the direct lump sum, for last 3 years, from 1 lakh crore to 1.5 lakh crore to 2 lakh crore. And this year, we are likely to hit above around 3 lakh crore kind of a SIP, which is likely to be there. So as long as this liquidity is there, I mean, there would be a surge in stock price. And see, the challenge with PSU basket is there's hardly any free float in the market, be it HL, BEL, data patterns, or for example, RVNL, IRCON. The free float is very less. So too much money chasing too little kind of a supply will keep this up. And secondly, the structural story remains intact. There is no problem on the structural side or the business side of these companies. Look at RVNL also got order yesterday, and every second, third day, the company continues to swell its order book. So that trend is continuing. Margins are improving. So ride the momentum. That is what the advice is.
Okay, Dharmesh ji, very good morning to you. Good to have you with us. Now that the budget dust is gradually settling down, where are you keeping your incremental focus on? I think all eyes are now shifting on how the global central banks are going to be moving on the interest rate fronts. And of course, the focus will be back home again on the same. But looking at those triggers now coming in, have you selected any key sectors, outperforming spaces where you are now putting in incremental money?
Yeah, good morning, Sakshi. See, I mean, the global factors, which is the interest rate related, is helping market only. If they cut, it would be a good bonanza for the markets. Even if they don't, globally earnings are very robust. I mean, there is no problem happening just because of the high interest rate. Even if you look at the financial earning of US companies, they all have reported a very good set of numbers. And see, every business has its own cycle. Sometimes it will be treasury income, sometimes it would be more of investment banking, and sometimes it would be the lending income which would be riding. As long as your net profitability goes up, it's fine. So that would be like an added icing on the cake if the interest rate comes through. Even if it doesn't, the things are likely to be good from the economic perspective. Coming to the sectors, I think again, if you look into and do the screener and back-end stuff, we again land up with the PSU companies where there is a value attraction coming into play. For example, I mean, Life Insurance Corporation of India still looks very attractive to me. PFC, REC came out with a very strong set of numbers, looks very attractive to me. Again, a proxy play on the power segment through the financing route. PSU banks have reported very good set of numbers, like Canara Bank came out with a good set of numbers. PNB came out with a very strong set of numbers. And if you compare their valuation multiples with that of SBI, there's still a good scope for them to be re-rated, and around 20-30% kind of a stock price upside largely looks into the play. So these are the areas which are looking attractive. Mid cap, small cap, we are working on few companies, 6, 7 names are there, where we find very high ROE multiples. At the same time, valuations have not, shooting through the roof. So there's still room out there. Since we have not released the report, I will just request in my next interaction, I will be detailing the names and we can read about that. And then you have to be stock specific. Like, for example, I was going through Genus Power came out with a very strong set of numbers. So companies like this will find attraction in the market.
Dharmesh, your view on the FMCG and IT sector. Okay, let's tackle this buyback first. Of course, October 1st is the deadline set by the Finance Ministry. Beyond October 1st, all buybacks, and if shareholders make money in that buyback, they are liable to pay tax at the required rate. What are the 3 or 4 companies you think will take this advantage of the time frame between, say, August 1st and 30th of September to float a buyback? Any names that come to your mind?
Shelley, I think the smartest way would be to go for a market buyback. So, I mean, if you go through that, then you can, skip this entire cycle. So, it's very difficult to comment right now. There are companies, but let's see what is the strategy they plan out. But I think open market buyback, I mean, TCS has done that earlier. We have seen that. So, that's a very prudent route to go through this. So, I don't
Yes.
think we should be placing trading bet through our tender route kind of a system on a buyback.
Dharmesh, let's discuss some of the key stocks now with you. One is BEL, something that I wanted to discuss with you after the results. There are brokerage houses reports that are coming in contradicting each other. So Jefferies has raised the target prices after giving a buy rating to 370 on BEL. It was a 305 from them earlier. They believe that there were stellar results. The 767 billion rupees order book is up 17% year on year. There is a strong visibility of revenues from FY24 to FY27. They also believe the guidance has been maintained, which is a positive. But on the other hand, UBS has downgraded BEL to neutral with a target price of 340. They believe the stock's medium-term growth potential is already priced in. How should an average viewer looking at a potential opportunity in BEL for the long term now look at the stock, sir?
Sakshi, I mean, this contradiction will always be there in the system. It depends upon the lens and through which you are looking at. If you are looking at from a structural long-term story, you will be buying Jeffries report. If you are looking from medium-term perspective, you will be buying UBS report. So I mean, medium-term perspective, it's very true that everything is fairly priced in. I mean, more than priced in. So that kind of a report will carry a downward kind of a rating. But I think India right now is not a medium-term story. People are looking at, and the people are buying this structural story of next 20 years kind of a growth. So their things remains pretty fine and robust. This year, I mean, earnings-wise, you will see a consolidation. I mean, we are revising our downward target for Nifty EPS. Earlier, I was thinking 12 to 14% kind of an EPS growth can come through. But seeing the numbers, how it is panned out for Q1 till now, it would be difficult because Q1 traditionally used to be the best quarter for earnings growth, and then Q4. Q1 and Q4 are the two quarters where you find the maximum bulk lifting on the earnings side. So this time, I mean, Nifty will end up with like 250, 260 kind of an EPS, and then it will be a challenge to give a 12 or 14% kind of a growth for the entire year. So a consolidation here, so multiple reports you will get through from medium term perspective where the downgrades will be there. We have already started seeing those. But these downgrades will give you an opportunity if the stock price correct. I mean, to enter into a long-term story kind of a investment bet.
You know, Sakshi, it's one of those conundrums in life. The report that comes out with the lowest price target in a running bull market wants to collect the stock for its long-term holders, and therefore comes out with such a report. And this is a fact, I'm telling you.
Right.
And the report that paints a higher target is trying to help its large clients to sell the stock at a higher level. This is how business is done in the world of institutional brokerages, and that's the reason why they need to be taken with a large bag of salt. There have been instances where well, let's just avoid this topic. We'll talk about it offline. It's going to be a lot of interest at that point of time. But again, as Dharmesh ji said, if you want to buy the stock now for a higher target, you will focus on the broker which has given a better estimate, and if you wish to sell and book profit, then obviously you look at the report. In fact, actually interesting is the one that has cut the target is set it at 340 and the stock is at 321. Therefore, it still has an upside. But again, BEL, one of those lovely stocks, even after a 1:1 split, has doubled in price. And of course, today there is an added thrust in terms of new orders flowing into this company. Dharmesh ji, 5% yesterday up on Cochin Shipyard, 5% on Garden Reach, and 10% on Mazgaon. Of course, the kicker was the very strong earnings coming in from Zen Technologies, again a defense player. Any favorites that you have amongst shipbuilders?
Yeah, Majgaon Dock is our favorites. I mean, second is the Cochin Shipyard. So these two companies we have been recommending, and to our clients to hold in their portfolios. So because the structural, I mean, story remains the same, Shalji. If you look at it, last 6 months, it's the railway infra stock, power stock, and defense stock which has been doing well. And fortunately, the order inflow and the kind of news flow surrounding them has also been very conducive. So it's a very bullish kind of an environment in which the entire ecosystem of these companies are working as of now from a business perspective, and things are materializing. If you look at the numbers, I mean quarterly updates, it's been reflective of the fact that business in fact is coming into these companies. At the same time, margins are improving and the quality of order is improving. Product segmentation is much better than what they used to do. So these things are going to drive. If you look at the valuation, then definitely you will get a scare. So that is the only disconnect between a purist valuer of stocks. You find it very difficult to justify. The only, I mean, option we are left with is for a structural 5 or 10 years kind of a perspective. Things look pretty fine. But certainly, I have been in this market for say 20, 21 years. So my own sense is there's a very strong flow and this is likely to stay. Even if we get a correction of Nifty for 10%, I mean, we can't look beyond that. The correction can hardly last for a few days. So these opportunities are like a good buying and accumulation kind of an opportunity.
Right. Okay. Apart from this, let me also ask you on ACC post the earnings, what is your own sense and the entire cement pack, since this was in the thick of action even before the budget? Now I want to understand, how are you placed on this?
Sakshi, if you look at the numbers were pretty fine and volume growth will continue for most of the cement companies. There won't be any problem out there. The problem is the blended realization. That will come into a big question mark. And post the announcement of Ultratech India Cement, I think this will be a further challenge. The competition is going to heat up. So, I mean, strategically and tactically, we have taken our bets off the cement company. So, we are not recommending any fresh buy on any cement companies. And I mean, for traders, it's sell on any rally kind of call which is there. A cement story, I think, is done and dusted for next 1 year. So, from the upside price appreciation, numbers will still continue and some valuation catch up will happen in this space. So, I mean, select stories like Sagar Cement or some, again, bid coming through or Ramco and all, that can still be on. But on a sector as a space, nothing negative about the sector, but I don't see price action happening just because the stock prices have moved up to their fair multiples.
Dharmesh, you would have gone through the earnings so far, but what we'll do is we'll just look at the pre-open. Well, 24,900 is back on the screen, 171 points higher, Sakshi. I think there is really no let up. A bit of a pause from 24,999 down to 24,827, and again the rally has begun with earnest. Now let's look at stocks that are providing this impetus. 10 rupees higher on HDFC Bank, 1617. This is the highest weighted counter on the Nifty. How about Reliance? Flat at 3040. Let's look at a potential buyback candidate. Let's see what Infosys is doing. At the moment, Infosys is trading 17 rupees higher at 1888. How about another candidate? TCS, 31 rupees higher, 4411. Needless to say, this is a record high. Now let's look at how prices are moving within banks. SBI is the top performer amongst the 10 index heavyweights, 1.6% higher, 885. You have a mild green tick on ICICI Bank as well. So the trend is fairly strong as far as the 10 index heavyweights are concerned. 24,950 is back with the bulls in the pre-open at least. Okay, Sakshi, hold your breath and I'll tell you the 10% uptick on Colgate Palmolive, 35.31. Needless to say, a record high. Very, very strong set of numbers. 364 crore rupees was the top line, and of course margins have expanded to 34% from 31.6%. You'll be surprised to know there was a mild 20% uptick on FDC. Remember, this is a pharma company which is a potential buyback candidate, but it's back to normal at 530. What else is moving? Earnings led Quest Corp, 4% higher, 748. You have a smart move coming into Garden Reach, 1.8% higher. News led, order led Rail Vikas Nigam Limited is 2.9% higher, and of course There is no let up in India Energy Extend, which you are following, 3.8% higher. A very quick look as far as the FNO is concerned, and then we'll again get back to Dharmesh ji. Okay, Sakshi, the market is smiling. The smile is getting better and better. Colgate refuses to move below 10%. So up circuit 35.31. Muthoot Finance 1.6% higher. Power Grid 1.3% higher. SBI a percent higher. GAIL ahead of its earnings 1.1% higher, and BEL, keep an eye out on this one, 1.3% higher, 325.50. Strong moves coming in, Sakshi, today. The Nifty is now flattened out, 24,838, 2.1 points higher. What are you watching?
Well, a whole host of stocks, Shail, that we'll be continuing to keep an eye out on. PNB Housing Finance will be the first one. Remember, there are reports that are indicative of Carlyle Group's Quality Investment Holdings (PCC) likely to divest about 6.4% stake in the housing finance company through block deals. Right now, the stock is flattish, but we'll have to wait to see how the stock is opening up. But Jindal Saw, where the profit rose by about 70%, is already indicative of an opening about 4% higher in trade. So that's the kind of result reaction that we are getting in. Some more result reactions. Let's look at HPCL. Remember, the oil and gas space has been in the thickest of action, especially the OMCs. They've been rallying and how. But HPCL's results, where the margins have come down sharply, we've also seen the net profit sharply lower in trade. There is a 3.7% lower tick on this one. But RVNL, again, the railway space will be in the thick of action, and huge order flow now coming in, and constant flows coming in for orders for this one, 3% almost higher for this company as well. Apart from this, let's also look at how Pfizer is reacting to its numbers. Good set of numbers coming in for Pfizer as well, and this is with respect to the kind of net profits, the bottom line figure that has come in, 3% almost higher in trade. A 61% uptick was seen on the net profits front for Pfizer, so that's another stock that we'll be watching out for. KEI Industries is another one that I'm looking at in terms of the kind of result reactions that are coming in. Remember, the net profit was up by about 24%, almost a 2% uptick that we have been seeing on KEI Industries too. Apart from this, let's also look at Maharashtra Seamless. Here the results were softer, so we could be seeing a downward tick on this one, Maharashtra Seamless. After on all the parameters, we did see softening of the numbers coming in for the company. Apart from this, let's also look at how BEL is reacting to those brokerage. Yes, there's a 5.5% downtick on Maharashtra Seamless. BEL is another one that we wanted to look at. Yes, so it's going the Jeffries way then, 1.1% higher in trade, right now at 325. So those are the kind of numbers that we're getting in, but it's definitely Colgate that's up 10%, 34.50 right now. Dharmesh ji, Colgate for you. You were talking about the FMCG space after stellar set of earnings coming in for this one. How would you look at the stock?
Definitely, I think there's a re-rating happening because of course the Patanjali fear and they're taking the business away. It doesn't seem like, and Colgate is again gaining its strength, and that's reflective in the volume growth. Normally, 5-7% kind of a volume growth is very good for these kind of a companies. Only factor again comes into play is the valuation part, because these are the companies which are just consumables. And though in spite of repeated ads of multiple kind of time, you may brush your teeth and all, but I doubt how much that is going to take the business up. So hygiene factor is definitely there, and penetration has been very good for these companies, even in the rural India and semi backward areas. They have been getting high penetration out there. So just play the right, but as a house, we are staying away from the FMCG pack largely. Only HUL is there in the basket, and ITC, and we are looking at booking profit out of that maybe in next 2-3 weeks.
Okay, the Nifty flat as flat can be. Two stocks need to be marked. ACC. Post a tepid set of earnings is down 1.7% in opening quotes, 25.60, and HPCL, as Sakshi has already pointed out, this is the top loser in the Nifty 200 basket at 375.20. Remember, earnings were also tepid at this point of time. Just the right point to welcome Mr. Rudra Murthy. He's the research head at Vachna Investments. Good morning to you, Mr. Murthy. Two stocks you think would make sense on technical charts today on the long and the short side, which might outperform the broader market. Sir.
Manappuram looks very, very strong. Yes, it had that correction towards that strong support zones of around 203, 204 zone. And from there, Manappuram is bouncing back. So for me, at current market price and at the range of around 210 to 215, Manappuram looks a very, very good level to enter. Keeping a strict stop loss of 203, which is the support zone, I will be buying positionally Manappuram. One can even buy it in futures, looking at targets of around 235 to 250 to come on Manappuram. And it is one of the very strong counters for me, even keeping in mind the budget 2024, where custom duty got reduced on gold and silver. Yes, these type of companies can do very good, and valuation wise I have a lot of comfort in Manappuram, so that is my top pick as a current buy. And if I have to pick another stock, I like Coal India a lot. No doubt PSU in terms of valuation is expensive in general, but there are few pockets where still you have comfort in terms of current valuation, and Coal India is one such stock. So for me, Coal India was facing stiff resistance on chart at around 500, 502. This was a very short-term resistance. And day before yesterday, very clearly it broke that resistance of 502, closed decisively above that level. And even yesterday, if you see the price action, even second half when we saw some profit booking, Coal India was standing very, very strong. And also few pockets in PSU like ONGC for that matter, or Power Grid, or there are stocks like Coal India right now. These are all stocks where still I have valuation comfort. So I'll be a buyer in Coal India, looking at positional target of 550 to come on Coal India. One can keep a stop loss of 500 at current market price. Again, it offers a great risk reward. So for me, the top two buys will be Manappuram and Coal India at current level.
Okay, good morning to you, Rudra, and thank you so much for taking the time out. Since you talked about Manappuram Finance, another commodity-related stock that I wanted to discuss with you is MCX. UBS has raised the target for MCX at 5,000. They believe the company's reported strong Q1 and Q2 is also going even stronger, even though the profitability in Q1 was impacted by just one-offs right here. But they do believe that the healthy uptick options in ADV are definitely going to be seen as positive. How are you looking at MCX?
Sakshi, very good morning, and definitely a great stock, and thanks for asking me a question on MCX. Yes, as you told, results were very good on MCX. Still on valuation, I have comfort. In fact, many of them keep asking us, and even our viewers will be very keen to know what are the stocks I have to buy at current market price. Most of us are telling market will be very sector specific and stock specific. So what to buy now? So for me, in that list, yes, MCX is also one of the stock. A longer term target might be for a year's time. I won't be surprised to see even a 30% kind of a move from current level. 5,000 won't be a bigger target for me on MCX. So one can buy positionally into MCX. Results are good. Keep on seeing quarter on quarter what happens. You also have this stock in F&O. One can buy in futures and keep rolling over, or even sell put options rather than buying call. Whenever you buy options, you need momentum to support with you, and do remember time decay or theta is always against you. So I always advocate, if you want leverage, buy in futures, or better to sell put option and eat time decay or theta. And MCX is a definitely good buy. Keep a stop loss somewhere closer to 4,100 and keep buying every dip on MCX. I will not be surprised to see 5,000 rupee to come soon on MCX positionally, and it's a must stock to hold in one's portfolio. And thanks for giving me this question on MCX. Definite buy.
The other reason and a sentimental one on MCX actually is the cut in customs duty on gold. Yes. Remember, that's the highest traded element as far as highest traded metal future on the MCX. So a cut in import duty will obviously make it a little more attractive for traders to look at that particular stock. Let's also look at a couple of spaces where you see movement coming in. I'm very keen to see what cement is doing, as a recent interview by the former India Cements owner, Mr. N. Srinivasan, points to a huge price war on rising costs, and he mentions them as the reason for the mid-cap player to sell out. Okay, I'm interested in Orient Cement, flat, 334.65. You have Kakatia Cement 1.3% higher, 239. Sagar Cement is 1% higher, 247.35. And of course, Mangalam Cement is 0.5% higher, 946. Heidelberg Cement is 0.5% higher, 238. Apart from Mangalam, the 4 or 5 stocks that I have mentioned are actually takeover targets, and they seem to be doing pretty well. Even Prism Johnson is in the green, 161 rupees, a third of a percent higher. Dharmesh, you've mentioned that cement is done and dusted and nothing to look at it for the next 1 year or so. But maybe 1 or 2 potential takeover merger candidates that you can name, which have quality balance sheets and possibly are trading much below intrinsic value.
Yeah, I mean, see, much below intrinsic value is hard to find because again, if the enterprise value per ton is less than $100, so there's a reason for that. But Birla Corp and Ramco Cements, these are the two counters which looks, it can be a potential takeover. So it can be in-house or somebody from the outside taking it.
Okay. We're just about 2 minutes to go for the markets to open. Right now, it seems like it could be some pockets of realty that could be seeing some ticks higher, consumer durables as well. Power Grid seems to be opening about 0.7% higher, Hero Moto, Titan, M&M. So some auto names also coming back to the fore. PSU names about 0.3% of a tick higher is what we can expect right now. Let's get in Rudra to talk about the real estate space. The way DLF moved yesterday, and are you seeing sentiments come back onto the realty space after some bit, because this space was losing a lot of ground right after the budget announcements, because a lot of negative sentiment flowed because of the indexation benefit removal. But the stocks resumed their uptrend yesterday. Do you think the real estate space is something that one should keep an eye out on?
Yeah, Sakshi, definitely yes. And just before that, I remember last time when we spoke, we did speak about India Cements when it was 300 rupee. And it was Shailesh when he asked me question on what can do good in cement, stock specific. I picked India Cement, and we have seen that move already from 300 to 375. But then I can tell you very clearly, yes, except India Cement because of the Ultratech news, and also after RKD sold his stake, we saw this big move in India Cement. It was more stock specific. But if you see other stocks, hardly Ramco Cement or few other names, Oriental Cement, these are Sagar Cement, they have hardly done any move for that matter. So more than sector specific, it has been a stock specific move only in only in India Cement. But however, I can still tell you right now, real estate as a pack, yes, again, you have to be very stock specific there. You can't go and pick any stock. However, even in budget, whatever that indexation benefit was removed from real estate, now the taxation or the burden of tax on the end user, that is the person selling the land, he has to pay more amount of capital gain tax without indexation. Now, I have to pick very stock specific calls, might be stocks like Oberoi Reality, might be Shobha from Karnataka, and you have even stock like Godrej Property, Purvankara, Kolte Patil. So these are few names. Still, I have some valuation comfort, and one can definitely look at buying these stocks. And if I have to stay from the large cap, I will definitely buy Godrej Property and DLF from real estate. Yes, the move has been already very steep in real estate for last 1 year. Any consolidation, any dip in these stocks,
Right,
you
sir.
have to be very stock specific and then buy.
Right, we'll focus on the markets. The Nifty's opened mildly in the green, 24,844. Let's look at how prices are moving, and it's the defense in the market that's kicking up. Hindustan Unilever 0.8% higher, 2736. Infosys 4 rupees higher, 1874. Tata Motors almost 2 rupees higher, 1125. What are the index heavyweights doing? Okay, Reliance 8 rupees lower, 3032. HDFC Bank 3 rupees lower, 1602. We have ICICI Bank 2.5 rupees lower, 1210. Nothing much happening there, ladies and gentlemen. It's likely to be a flat opening. Okay, what's moving in strength? RVNL. This is the most active counter so far with gains, 2.2% higher, 620. It's emerged as the lowest bidder for a 754 contract. PNB Housing block deal on the way, 1.5% lower, 783. BEL about 0.5% higher, 1% higher at 324. This is again news driven. Okay, market is reacting positively to Colgate Palmolive, 3.5% higher, strong set of earnings, margin expansion, sharp growth in profit. HPCL is seen booking profit 1.2% lower, 376, muted earnings, and that is getting reflected in the markets. Power Grid is back in the action on the long side, 1.9% higher, 348.5. Green tick on NTPC, 2% higher, 402. These are the stocks that are clicking with gains on the most active list. Let's look at top gainers. Taking it away, Jindal SAW 5% higher, 632. Again, this is earnings led, which we've discussed. CESE is expanding its green energy portfolio, 4% higher, 173.7. Paytm NTPC in the green, 2% higher. And of course, it's the blowback that is coming from the defense sector. Now you have Garden Reach, which is gaining about 1.3%. You have a strong move coming into Zentech, which is Zen Technologies, up 5% yesterday, 3% up today. The management will be joining us for earnings at 11 a.m. You have BEML about 1% higher, and of course you have a strong move coming into BEL, 0.5% higher. Zomato is clicking in, 231, and there is Sakshi no stopping. Colgate Palmolive 3.5% higher, 33.57. What are you watching?
In fact, the entire FMCG and the consumer space is now taking high. HUL, Asian Paints, Britannia, Tata Consumer Products. You have the entire space now buzzing in trade. Even Titan is higher in trade. So the consumption theme is coming back to the space. Even the power names like, NTPC, Power Grid, they're also up and about right now. Some pharma names taking higher like Dr. Reddy's, Cipla. They're also moving up in trade. Within the auto space, you have Maruti now taking higher by about 0.3%. Hero Moto also up and about in trade right now. Again, from the pharma pack, Sun Pharma is also showing us some green tick. So the action is limited. And if you look at the Nifty 50 stocks, almost half of the stocks are still into the red in trade right now. Top drags on the Nifty are Ultratech Cement, Hindalco, L&T, SBI Life, JSW Steel, LTI Mindtree. So some profits being shaved off as well, some of these movers. PSU basket still is holding up about 0.5% higher in trade. So apart from the power space majors, NTPC, Power Grid, NHPC, you have again BPCL, Bharat Electronics up by 0.5%. LIC is ticking again. You also have BHEL and GAIL also moving up in tandem. Consumer durables is now the top moving sectoral index right now, which is led by sharp moves on Crompton Greaves Consumer, that's 6% higher, and it's also the top mover within the F&O space. Blue Star, V-Guard, Voltas, these are the kind of stocks that are ticking higher. Rudra, consumer durables, anything that takes your attention?
See, yes, Sakshi, definitely if I have to pick any of these stocks names, and also moving from FMCG, which is more closely related with the sector, yes, the move in Colpal for the results, whatever has come, it has not been so great. So even at current levels, I'll be a buyer in Colpal. Results were definitely way far better than what the price is indicating right now. However, Tata Consumer is one stock which is giving results today, so I will wait out for the result and then look at buying. Even on chart, yes, there is some short-term weakness in Tata Consumer, but positionally it's a great stock to own. I will wait out for today's results to come, and might be at lower levels I will look at buying Tata Consumer. And even if I have to look into Blue Star chart, yes, positionally this is a great stock. One can definitely look at holding Blue Star also. It has been in a very clear uptrend. Strong support for the stock is at around 1600 620 zone. So better to buy at current level partial quantity, and on dips you can add. Definitely charts are very strong for Blue Star also. One can look at targets of around 1850 1900, and once it crosses that all-time high level, it can further move up.
Okay. We'll get you, Dharmesh ji, into the conversation. Yes, Shail, please continue.
Yeah, 1,400 shares in the green, 650 in the red. So the markets are starting on the green foot. But Sakshi, there is mild profit booking all around as far as frontline counters are concerned, except for FMCG, which you've already pointed out. There isn't much happening. So the market actually assuming a defensive shape as far as the frontline counters are concerned. FMCG index 0.5% higher, 62,774, and it's again led by Colgate, a sharp move coming into Hindustan Unilever, and of course you have Asian Paints 1.5% higher at about 3,001. So that's the defensive part, and if Asian Paints is up, who can stop Pidilite 1.37% higher. What's slightly bothersome is that the frontline indices where a lot of action was concentrated yesterday. Nifty PSU banking index in the red, IT index in the red, auto index mildly on the back foot, Nifty financial services index 0.2% lower. That's creating a problem, but that's what balance is about life. Hindustan Unilever now trading at 2749. Would you want to, Mr. Rudramurthy, comment on Hindustan Unilever?
Yes, definitely, Shailendra. Hindustan Unilever is one stock again with ITC I will surely have in my portfolio. See, one has to understand FMCG as a pack has not performed for a decade now. So even buying after this up move for short term, what we have seen in Hindustan Unilever from already 2,500 post earnings, it is now closer to 2,750. Yes, there has been a 10% move in these counters, but still I will be a buyer in Hindustan Unilever. Similarly, look at ITC, look at Imami. So these are stocks after last 10 years they are breaking out, and for me on a longer time frame, even the short term 10% kind of an up move can still be considered, and even at current levels it is a buy. So ITC, Imami, Colgate as well as Hindustan Unilever, yes, these top 4 stocks from FMCG can still do good from current level.
Okay. Got that. Let's get in now Dharmesh ji into the conversation. Dharmesh ji, how about stocks like Jindal Store that are reacting positively post earnings? Do you see enough and more strength that could be seen in a medium to long term basis? One should look at such stocks?
Yes, again, I think it's the one-off trade kind of a thing which has happened for Jindal Saw. It cannot be trending because if you look at the sector as whole, I mean, Master CMS came out with the numbers which was a very bad set of numbers. So let's wait and see how this entire structurally pans out. Maybe one more quarter we have to give it. But as I said, today it's working fine. It may work fine for next couple of days as well because it has corrected sharply from higher levels, and such kind of an earnings definitely warrants trading buy. So that is what we are witnessing. But overall, I'm not very right now positive on the entire metal space, be it steel related.
Okay, got it. Then could you also share your views on stocks like Paytm now? Again, a sharp surge can be seen on this one. Again, in trade today, the stock is hovering around 508 odd levels right now. Is there a sense that things are improving for the better here?
Sakshi, if you look at Paytm, it's more of a news flow driven corporate re-engineering kind of a thing, business re-engineering and all those stories are floating around and things are working around that. As far as basic business numbers are concerned, it is worsening. So I mean, it's a hope trade that things may turn out this way or that way, and then hypothesis kind of a scenario is being played out. So we are just staying away. I mean, very aggressive traders can always take a technical bet depending upon the breakouts and breakdowns. But structurally, let things, I mean, just settle down and see, because investors have lost huge money on this counter earlier as well. So this theme of I mean, all this new age theme, this was one of the disasters which has happened in the market.
Sakshi, I think the theme is the PSE companies, public sector enterprises. Very strong move into NTPC, 4% higher, 409. You have Power Grid trading 3.3% higher, 352. In fact, the Nifty Energy Index, which is comprised only of mostly PSU stocks on the energy side, is the top gainer, 1.3% higher at 44,190. And the Nifty PSE index is actually taking it away, 1.3% higher at 11,692. Across the board, it's the power pack which is showing great strength, and of course BPCL. These are the winners that are there in initial trades. Mr. Rudramurthy, your pick, NTPC, where do you think this is headed? It's starting 4% higher in the first 10 odd minutes of trade, and now at 411. Needless to say, this is a record high.
Yeah, definitely the results were very good for NTPC, Shailendra, and yes, even on the chart, this is again another stock from PSU where still you have valuation comfort. So I will definitely be a buyer in NTPC, buyer in Coal India, buyer in ONGC. These are all PSU stocks still where you have valuation comfort. Might be yes, a dip to levels closer to 400. You keep accumulating from current market price to dip to 400 on NTPC. Yes, I will give target of 450 on NTPC, and Coal India is still another very big mover in PSU. Available at current price of 514, 550 is the target what I gave morning. Manappuram is another stock which I told you. See, even in a flat market, these are stocks which are performing very good, and these are all shares available in futures again. So good liquidity, good volume, get in and get out is easy. Spreads are lower, and trader wants some of these kind of stocks. So yes, buy in NTPC, buy in Coal India.
Okay, this is what is happening in the space of energy. Sakshi, all of them are booming. Coal India is 517, about a percent higher in futures. I think it's the entire power space. Look at how things are moving on power grid, 3.6% higher, 354. Let me just see whether this is a record high or not as far as power grid is concerned. Otherwise you will have more momentum coming in. Okay, this is a record high, ladies and gentlemen. A very quick view on power grid, Mr. Murthy.
Shailendra, even when we discussed about all the PSU stocks, yes, Power Grid was also one stock which I named. It has given a breakout on chart above levels of 350. Now today, decisively trading above 350, closing above 350 will be a fresh breakout. And yes, stock can move towards 380, 400 zone. Even fundamentally, valuation comfort is definitely there in Power Grid, even at current market price. So I buy for a target of 400.
Okay, got that. You're right. The entire power space is abuzz with action. CESC is now up over 5%. Even IEX is joining the party, 2.5% higher in trade. So we'll continue to keep an eye out on this entire power space and the theme that's developing. And the other space that is also buzzing in trade is again the brokerage related stocks, stock markets related stocks. So CAMS, for instance, Nuvama Wealth, that was a buzz yesterday. It's continuing its move today. 361 WAM, CDSL, all of these stocks are abuzz with action yet again. Let's get in Dharmeshji into the conversation. Dharmeshji, how about this entire, broking industry, wealth management space? How are you looking at this space, and what looks good to you from within this space?
See, the space looks very attractive. I mean, compounding of 20% plus is very much on the cards. And the type of inquiries and everything is flowing out. See, the entire mutual fund industry is expanding rapidly. SIPs, we have already talked about. At the same time, broking, we are seeing a lot of new client entries happening into play, which have never ever traded. They are, also coming into the market big time. So the story is here to stay for next 10, 12 years, definitely. And then maybe some saturation may happen, and this re-rating of valuation will happen. So sector looks very specific. Since I am also in the same industry, cannot comment on a particular companies what to buy and what not to buy. So that selection you have to do yourself.
Okay, got that. Well, we'll thank you, Dharmeshji, at that point in time for being with us on this
Thank you so
edition and
much.
sharing all your insights. We'll hope to have you back very soon on Market Today and on Business Today television. We'll continue our conversation with Rudramurthy, and let's discuss with you, Rudra, especially when it comes to the chemical space. A lot of buzzing stocks that I can spot here: Himadri Specialty Chemicals, Naveen Fluorine. How are you looking at this entire pack that had just started to move right before the budget? Does it still have a lot of steam, and where would you keep your attention?
Sakshi, I'll be very clear. three space which can do very good broadly even from current market level where you have valuation comfort. One is chemical, and I will even say if you pick OMC stocks, whether it is BPCL, HPCL, which we spoke last time in our discussion also, that yes, these are stocks which can still do good from current level. So
Correct.
chemical is one sector, OMC, oil marketing company, another sector where you can pick stock. Insurance is the third theme which I even spoke
Yeah.
last time. You see already stocks from insurance, whether it is SBI Life, HDFC Life, even LIC Corporation for that matter, these are stocks which can still do good from current level. My top pick is SBI Life. Second, I will pick HDFC Life. Third will be my LIC. However, if you want to pick from oil marketing companies, yes, we spoke about HPCL, BPCL, IOC. Now, when it comes to chemicals, yes, that is another great theme. Even at current level, one can look into buying them because you still have valuation comfort. Yes, in that, Navin Fluoro will be my top pick. If you see the chart pattern again, last 3 to 6 months, it has just been consolidating. Just now, you are seeing some amount of uptick coming there. Yes, strong support now for this stock is at around 3,500, 520 zone. Even at current market price, I will be a buyer in Navin Fluoro. Once this stock moves above 3,700, 750 zone, a further up move can be seen. So Navin Fluoro is a great buy. Even you can look at stock like Aarti Industry for that matter from the same chemical space. Still there is valuation comfort, still there is legroom space in Aarti, and yes, chemical as a theme can do good because from current market price, the downside is very limited for chemical. You have seen already a big correction happening in this sector. So Navin Fluoro and Aarti Industry at current level looks a very good buy. Even at current level, insurance company and OMCs also look a very, very good buy, and few names already I have spoken on the same.
Sakshi, we'll focus on the index. Now at day's high, 24,933. It spent about 15 minutes pausing, and now about 27 points higher on the cash side, and 51,514 on the bank Nifty. It's hit a century. Let's see whether it's able to take out on the Nifty 24,940. This is something which is the most immediate resistance that you see. What's moving? It's defense. You have a 4% uptick on Garden Reach. Remember, this was a stock which hit the circuit 5% higher yesterday. You have a strong move coming into Cochin Shipyard, 2.9% higher. Mazgaon, after yesterday's 10% circuit, is again moving 2.75% higher. And of course, you have a green tick on BEL as well. What is in pain in defense? It's Idea Forge, ladies and gentlemen. Modest to negative earnings, and it's getting thrashed by the markets. 8% lower, 787 for you. Smart move in Jindal Saw. I think now is the time to get this screen at about 640. Needless to say, this is a record high, and this is, as Sakshi had pointed out in early quotes, is moving on the back of a very, very strong set of earnings. 640, okay, it's a blowout already, record high, and fairly decent volumes. Mr. Murthy, would you want to step into Jindal Saw at this point of time?
You can even buy it another 50 rupee higher also, Shailendar. Jindal Saw is a great, great buy. These are stocks which you have to hold in your portfolio, buy every dip, and whenever you get market correction, every stock will be painted on the same brush mostly, and you get fall in some of these good stocks. For me, clear breakout is seen in the chart above 600. Now at 640, even if I am buying 40 rupee more than the breakout zone, percentage wise about 7-8% than the fair price, no problem. Still this stock will give you money over a period of time. Yes, if you are a very, very short term trader, wait for dips closer to that breakout zone or buy some quantity at current market price, and on any market correction, if you get Jindal Saw closer to those breakout zones of 600, 605, enter this stock. Still long way to go. I won't be surprised to see 750 rupees on Jindal Saw to come soon, and it is a great, great buy even at current market price.
Got it, Rudra. Another stock that I wanted to discuss with you is again from the auto space. Now, Tata Motors, the way it has been coming back into action, but at the same time trading in a range-bound fashion right now. What is it indicative of? And do you think this is a good enough time to accumulate this stock?
Sakshi, I'll be very clear on Tata Motor. First of all, after a long consolidation, when I say long consolidation from March to August, there was a consolidation for about 6 months in Tata Motor. And if you see the price range for this 6 months, on the lower side it was 950 and on the higher side it was 1050. So it was just a 100-point range where the stock consolidated and it took 6 months time. Now having given a breakout above levels of 1050, in last 3 days the breakout has sustained and the stock is moving up. So I will be waiting for any dips to this zone. Yes, you have earnings to come and I have no clues on the same, but however I won't be surprised to see, based on the price action what you see now for last 2-3 days and the breakout above 1050, earnings can be still good. This stock can move towards 1300 1400 zone. So buy at current market price, keep some space to buy if there is any dip in the stock. Ideal price to buy will be at that breakout zone of about 1050 1060 zone. So yes, Tata Motor is a buy for a target of 1300 initially, and even from there it can do good. I will be a definite buyer in Tata Motor, but ideally good to buy closer to levels of around 1050 1070 zone. But even at current market price, if you want to buy, yes, the stock is in clear buy mode.
All right, it's in a clear buying mode as of now. The auto space and Tata Motors at about 1146 now, a 2% uptick that can be seen on the stock right now. Whether it is also leading the other stocks into the green, the index has come back into the green for sure. Let's look at some of the other stocks. So Hero has been just mildly higher in trade, so has Maruti been. But some of the other ancillary stocks are now picking up pace, like a Bosch or Balkrishna Industries. Those are the spaces that are abuzz with all the action. Anything in the auto ancillary pack that you're looking at? We have been discussing, how the stocks like Samvardhan Motherson have been moving, Uno Minda, Jamna Auto, JBM Auto. These stocks have actually been in the limelight. Even the bearing makers have been in the thickest of action. What next? Which are the kind of stocks that will move next within the ancillary pack now?
Sakshi, because you spoke about bearing and auto auxiliary, yes, for me, a stock called NRB bearing is a good stock to buy at current market price. Currently available at around 329, 380 zone. Definitely a buy and have it in your portfolio. Fundamentally stock is good, valuation comfort is there, on chart it looks very great. So if I have to buy any bearing stock or auto auxiliary, I will look at one NRB bearing. And if you have to see few other stocks, yes, I heard you talking about JBM Auto, Jamna Auto, fabulous. These are stocks one should definitely hold in their portfolio. And if you want to have a mid and small cap kind of a portfolio, be in quality stocks where you have valuation comfort and where fundamentally these are stocks which will have more upside and downside is very limited. Yes, Jamna Auto, after seeing that move above levels of around 135, last 2-3 days it is consolidating. Yes, at current market price of around 137, I will be a buyer in Jamna Auto. Another stock from auto auxiliary is JBM Auto, which you mentioned. Again, a very, very good stock to have in one's portfolio. And if I see the chart pattern on JBM Auto, I know this stock from levels of 300. But yes, along with Maruti, more than Maruti, JBM Auto, the auto auxiliary performed so well. Even at current market price, it looks good for me. But on a preference, if you want to have a 2 to 3 year kind of a time frame and you want to build a good mid cap portfolio, I'll be picking NRB bearing as well as Jamna Auto.
Okay. What's clicking in trade is now Coal India. Let me just check whether this price of 521 is a record high for it or not. I think it is. Let me just reconfirm it. No, the record high on an intraday basis is 527. This is what we saw on 3rd of June, the day before the counting of votes for the national election. So that's a threshold that has to be passed. And of course, what's buzzing is Indus Star, 452 rupees. up about 1.5%. Industar has two events today, earnings for the first quarter, and of course the board will meet to discuss a potential buyback. What also is in thick trade is Tata Motors. That's been discussed with both Mr. Murthy and Sakshi, and at the point of time it seems that Tata Group stocks are in good shape. Mr. Murthy mentioned Blue Star from the air conditioning segment. It's Voltas from the Tata Group and in the air conditioning segment, up 2.4% at 1565. Very sharp move coming into all OMCs. We've discussed BPCL and HPCL in detail. HPCL of course post earnings, but it's the entire power space. Look at Tata Power, look at JSW Energy, look at CESE, and of course look at Adani Power. These are the four stocks on the power producer side, and their back end, which is NTPC and of course Coal India, doing a pretty good shape as far as markets are concerned. Nothing much happening as far as the Nifty is there, 26 points higher, 24,864. But what's buzzing is the Nifty PSU banking index, 7468, up 0.5%. Sakshi, what are you watching?
Parsvanath Developers is again up and about. It's sharply higher in trade, 9.9% up within the real estate pack, and this stock has been buzzing for the last few days. I asked you on the realty pack also, Rudra, earlier, but how are you looking at these mid-cap real estate names that have been rallying? Anything to track here and chase the momentum?
Sakshi, when it comes to Parshvanath Developer, one should not forget this stock from higher levels has just corrected. And for me, these are not mid or small cap stocks one can definitely have in their portfolio. Rather, I will name these stocks as lottery stocks. So in Karnataka, lottery is banned, but however, you can go to Kerala and play lottery than playing these type of stocks. What I can tell you is, I will definitely say, why do you want to buy Parshvanath Developer? See how much wealth destruction these stocks have done. No doubt, yes, I understand last 2-3 days there has been a price move on the upside, but I'm just trying to see my chart from where Parshvanath Developer was there when it was at the peak, and I'm trying to drag it and see. So more than 80% of the wealth has been destroyed in these stocks from higher level. So why do you want to go to Parshvanath Developer? So if you want to play the real estate stock, better to play stocks like Oberoi Realty, Godrej Property, might be DLF, Kolte Patil. I can even name Purvankara, Prestige, Shobha Developer. So many names are there. Why Parshvanath? But if someone is so keen to only trade in Parshvanath, better for Kerala Lottery.
Okay, that's an interesting take right there. Let's get in some other names from the mid-cap basket, because the mid-cap index is at a record high. Let's see which are the mid-cap counters that have been doing very well. Nykaa is up by 5%. Remember, we discussed Paytm. Now Nykaa has sprung back to action. Paytm is holding about 2% higher in trade. Let's also pull up the other new age tech stocks to see whether the momentum is spread across. Let's pull up PB Fintech, let's pull up Zomato for instance, to see whether this space has enough and more to track. And then I will be reading up some more names from the mid-cap basket. PB Fintech is lower in trade. So I think it's about Nykaa that's been buzzing sharply in trade. You have any view, Rudra, on Nykaa?
Yeah, so for that matter, if I have to pick two stocks from the space of e-commerce or where you have this kinds of the new age play,
yeah,
I will definitely be picking two stocks from that. Yes, one is Zomato. No doubt Zomato at levels closer to that 40, 50, 60 was a mouth-watering buy. We have already seen a 5-bagger in Zomato from those lower level. But if you compare with issue price of around 130, 40, which it was, Zomato even at current market price still has some more space, and valuation wise I still say seeing the turnaround in Zomato and after they becoming profitable, I feel Zomato is one stock. If you want to play the new age theme, e-commerce theme, my first pick in that will be definitely Zomato. Yes, around 180 also it was a still comfortable buy. Even at 225, 230 zones currently, you can buy, and any dip to levels closer to that 180 to 200 zone, it will be a buy. I won't be surprised to see Zomato at 350, 400. Only thing is, I may not trade at current market price because I may not have a great risk reward because stop losses are much deeper from current market price. But if one wants to pick these stocks for their portfolio and you want to stick to only new age theme or e-commerce theme, be very specific. In fact, I really loved Dharmesh comment when there was a question asked on Paytm to him. This is again another stock which has destroyed wealth. Where was the issue price of Paytm and where is the current market price? We are only seeing Paytm moving from, let us say, 300 to 500, and we are saying, okay, it has moved up 70-80%. But we have forgotten it has destroyed 70-80% of the wealth from the top. And one should understand, from a lower level, when we count the up move, it looks bigger. And let me tell you mathematically, Sakshi, which is so surprising, if a stock falls 90% to come back to break even or the same price, the stock has to go up 1800% and not 90%. A down move of 90% is not equal to up move of 90% because the base is different. If a stock from 100 falls to 50 rupee, the fall is 50%. But from 50, if it has to go back to the purchase price of 100, the fall of 50% can be made good by a rise of 100% and not 50%. So I am still saying no for Paytm. If you want to buy Paytm, then be ready to pay your M to M. So I will not buy Paytm. And I will still buy Nykaa. I will still buy Zomato if you want to stay from that particular theme. And only two stocks which I will buy from that particular team will be one Zomato and second will be Nykaa. If I have to see levels on Nykaa, yes, levels closer to 180, 170 is a very good price to buy. Even at current market price, you please buy Nykaa if you want to stay with that theme. I won't be surprised. Again, this stock can move towards 280, 300 zone. So Zomato, Nykaa, two buys if you want to stay from new age theme.
Okay, that's an interesting take. If you have to buy Paytm, you have to
940.
get ready to pay M to M. That's a line that you have said, which I will remember, Rudra. Yes, Shail, I think all the shipbuilder stocks are zooming ahead, Shail. Mazagon, Garden Reach, Cochin, they're all up and about.
Of course, Sakshi, and I think the stock to watch would be Mazgaon. Wonderful charts, and of course, apart from Garden Reach and Cochin, which are at 5% circuits, Mazgaon still offers an opportunity, at least on the charts. Let's get Mr. Murthy's view in. At the moment, Mazgaon is 2.8% higher, almost 5,500 for you. Mr. Murthy, what are the charts of Mazgaon telling you?
Shailendra, first let me purely tell the chart view and also my take on fundamentals also of Mazgaon. Being a chartered accountant, I do look at fundamentals also for investment, but yes, for short-term trading, you see charts. Now, specifically on chart, 4,850 is the support now on Mazgaon dock. So, keeping that stop loss of around 4,800, you can buy this stock and ride the momentum on the upside. But do keep in mind, you have to keep trailing stop losses because these are stocks which have run up too much. I will definitely not pick any of these stocks for my portfolio at current market price. Yes, it has been a 10 bagger in no time, and the same story applies even to Cochin Shipyard. Or I know when it was at 300 rupees, people were not interested to buy Cochin Shipyard, and right now if you see the price of Cochin Shipyard, again another stock which has already moved up, might be close to 8 times or even close to 9 times from where those stocks were available. And this move has been in a very quick time. I have not seen this 10 bagger in next 3 years, 5 years kind of a move. All this has happened just in 1 year. So for me, these are not stocks to exit. If you have, might be at current market price, I may not buy fresh. In fact, I would rather book partial profit if I have these stocks in my portfolio and try to buy few other stocks where I have valuation comfort. What one has to remember is these were great stocks to buy 6 months back, 1 year back. But I want to find out today what are the stocks which will give me money for next 6 months, next 1 year. I know people talking about MRF, people talking about Wipro, telling that if you would have bought MRF in 2000, by now you would have made 150 crores just for an investment of 1 lakh. If I would have bought,
Right, sir.
what is important is which is the next MRF, which is the next Wipro. That's what I want to bet today.
Right, sir. We'll also look at PCBL. This is, of course, the earlier Philips Carbon Black, 332, and a very, very strong momentum coming in, 11-12% higher as far as prices are concerned. Almost the previous high was on 9th of February when we had a price of about 342. So this is a very strong move that is coming in on PCL. There is absolutely no stopping Jindal Saw now 648 and moving higher. This is the third day of gains as far as Jindal Saw is concerned, and today's move is an uptick of 7.5%. What's also moving in the small cap space, Sakshi? Let's look at that index. We generally don't talk much about it except hit upon stocks which are moving in that one. The small cap index in terms of top gainers is housed by earnings boy Naveen Fluorine, 4.5% higher, 37.32. CESE we've already discussed. CAMS, Sakshi's mentioned, still 4% higher. Coaching we've discussed. Mahanagar Gas, Gujarat State Petronet, again 3 and 3% up respectively. You have HFCL, IEX, Sri Renuka Sugars, and of course Medanta doing pretty well. What also is moving as a sector is the paper space. I was seeing a very, very strong momentum coming into quantum paper. This starts with K, KUANTUM, 3% higher. You have Malu paper, 11% higher, and of course you have companies such as JK paper, 1% higher, 521. West Coast doing a percent higher at 626. Sakshi, what are you observing?
Well, Shail, another space that we need to watch out for is the Adani Group stocks that we haven't paid attention to. This is because Adani Energy Solutions is now expected to launch a QIP. Maybe this week or next week, as per some of the reports that are indicative of, and this could be huge, like a $1 billion QIP and almost 8,400 crore rupees that the group could be looking at raising for the Energy Solutions company. Why is this important? Is because remember the FPO was cancelled out, and then we actually saw a lot of lull right there, but now finally fundraise expansion plans are now taking place within the group, so that could again bring back the focus to the Adani Group stocks. We've already seen Adani Energy gain about 5.5% last month, and it's outperformed the Sensex. But your sense on the Adani Group stocks, Rudra, and on Adani Energy, how would the QIP be looked at?
See, first of all, if I have to pick two stocks from Adani Group, my first pick will be Adani Port and second pick will be Adani Enterprises. But however, specifically if I have to see the charts of Adani Energy, yes, this stock has been just moving down from levels closer to that 3,700. Now it is 3,100. So there has been a 20% correction what we are seeing in Adani, sorry, I am talking about Adani Enterprises. And if I have to look at Adani Energy, yes, Sakshi, Adani Energy Solution, again from the peak, if I see, this stock has corrected from those levels of around 1,250 was the previous high. From those levels of 1,250, now it is trading at around 1,060 zone. Yes, this stock has again corrected for about 12% from the peak. So Adani Energy, yes, let it start trading above these zones of around 1,075, 1,080. Once it crosses and closes above 1,080, yes, a fresh move on the upside can be seen in Adani Energy. But if you give me a choice to pick two stocks from Adani Group, my first pick will be Adani Port and second I will look at Adani Enterprises.
Got that. So that's the Adani Group stock picks that Rudra has shared with us. Oil and gas sector has moved to the highest spot within the sectoral moves, and of course it's the all across the board move that you're seeing. Within the OMCs you have BPCL that's been taking the top spot, 4.4% higher. Gas space is higher in trade. MGL is now 3% up. Along with it, GSPL, Gujarat Gas, GAIL, the entire space seems to be pulling up. Petronet LNG as well. You also have Indraprastha Gas now, that's moving up. And of course, the upstream majors, ONGC and Oil India are also taking higher in trade. Within the gas names, would you have a preferred, pecking order, Rudra? Would you look at these city gas distributors positively?
Yeah, Sakshi, thank you so much. The stocks, whatever you pick, or even the sector themes, what you are picking makes a lot of sense. I really have to appreciate the commendable amount of hard work you and Shailendra do. And I want to tell you, yes, after insurance as a theme which we spoke today, OMCs we identified much before. Yes, right now for the next upcoming theme, I will be advocating a clear buy on this gas distribution company, and GAIL will be my top pick. Yes, last time when we spoke, it was 2 stocks, in fact 3 stocks, all starting from I. It was Infosys, Indus Tower, India Cement. I very well remember, and see the move which has happened in all these 3 stocks, and all 3 are available for you to buy in futures. These are not stocks which are not available in future. They are available in future. Good liquidity, good volume, good spread. These are very important if you are a short-term trader, especially if you are an HNI with good amount of capital. So for me, the next upcoming theme will definitely be the gas distribution companies, and in that GAIL will be my top pick. For me, what is very important is valuation comfort. For me, more than upside, what is important is what is the limited downside we have on the stock, because you don't have to take care of profits, you have to only take care of losses, because profit will take care of itself automatically. You don't have to do anything for it. You have to only ensure the downside is limited, or cut your losses short, run your profit, don't do reverse. People normally cut their profits very short and run their losses very big, hoping and making prayers. I believe in God, but God will also not help you if you don't keep stop losses and if you trade. So I want to clearly tell, yes, gas distribution companies will do good, and in the order, if I have to pick, number 1 will be GAIL, and next will be MGL as well as IGL.
Right, sir.
GAIL is my topic here.
Right, ladies and gentlemen, 9:58. Let's just wrap the market. Nifty back in the green, 24,860. It's range bound. Day's low was 24,860, and at the moment it's trading at 24,924. So that's the move that is coming in, at least in the futures part of the market. A flat move on Nifty Bank. 31 points higher. Nifty IT index is bleeding a bit, just 0.5% lower. Nothing to be worried about. The action today, ladies and gentlemen, is in the entire PSU pack, whether it's defense led by Masgaon, Garden Reach and Cochin, whether it's railway led by RITES and of course RVNL, or it's the entire energy pack. We've sort of run out of breath, marking Power Grid, marking NTPC, Coal India, and of course the 3 OMCs, BPCL, IOC and HPCL. It's a secluded kind of a market where action is concentrated on one part. Traders and investors are letting the Nifty consolidate at current levels before it starts to aim higher beyond 25,000. But that's the state of play as far as the first 45 minutes of trade is concerned. Sakshi.
All right, we'll thank you, Rudra, for our morning edition today, and thank you so much for sharing all those wonderful insights like you always do for our viewers. Truly appreciate your presence with us here on Market Today and on Business Today Television. Viewers, we'll wrap it up at that. Many thanks for being with us, but do stay tuned. A lot of earnings conversations will follow suit, and of course, daily calls and the closing edition of Market Today up next for you. So this is an action-packed day. You don't want to go anywhere. Stay tuned with us on Business Today Television.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me now is Atul Kumar Goyal, the Managing Director